Good morning, everyone. Welcome back to another Wealth Coffee Chat. Yeah, Jeff, back at it. Took a week off. It's kind of nice. Down in Sydney, hanging out with some wonderful, cool people. And long weekend and public holidays and all sorts of stuff. And there you go. Here we find ourselves. I forgot to update the title this morning. That's how relaxed I am. We're going to talk about the vacancy rate, the rent crisis that's going on today. So hang around. Make sure you stick around for our Wealth Coffee Chat. Good morning to everyone who's jumping on. James, Bob, Jeff, Paul, Deb. Morning. Whoever you are. Facebook user, good to see you. Usually the old private groups don't let your name pop up, but good to see you on, whoever you are. Quick intros, as we always do. Jason Witten's my name. Most of you know that, so that's good. Been property investing over 20 years, coaching property investors just like you. Do some cool things, which means buy some good quality real estate and keep it for a long time to create some wealth. Yeah, there you go. Plenty of things going on, as always, out there in the world of property investing. Yes, Jeff, one of those things is people losing their minds about land tax. So we might even touch on that today. Why not? It's a Monday, a marvelous Monday morning. James Murray, good morning to you. Good to see you. Well, there you go. Hopefully people jump on. I think we've used this title about 3 or 4 times now. But anyway, wherever you are, whatever you're doing, I hope you're awesome and well. I wanted to talk about the vacancy rates or the challenges that are going on. For people who are renting, for those who are landlords, this is going to be interesting. An interesting little bit of time. One of the challenges we've got for us as landlords right now is just to manage some of our expenses. Our main expense, which is our interest rate, has been on the march, and it's been going up ever so slowly, but certainly something we've got to keep an eye on. But something that is certainly behind the scenes for all of us folks, not even behind the scenes, it's front and center right now, that's going on. We need to make sure we understand and appreciate is that the vacancy rates are pretty low. Yeah, James. Yeah, there's quite a lot of resistance to this Queensland tax law change. I wouldn't be surprised, folks. I wouldn't be surprised if there's a bit of a back down at some point from the government. But we shall see. We shall see. This is something that we all need to manage and have a bit of a look at. Why don't we? I've already prepared something here earlier. Why don't we have a bit of a look at that? All right. Why don't we have a little look at the land tax thing? Why don't we do that? Because you know what? I'll leave this vacancy rate one for tomorrow. Because everyone seems to be interested in the land tax things. Tell me in the chat. Do you want to talk about this land tax thing? Because I've got a calculator that I want to show you. Give me a yes or a no. Maybe we can talk about both. Who wants to quickly talk about the land tax malarkey? Land tax. All right. Well, listen. What is going on here? Let's go to our iPad. Land tax. Queensland, specifically the QLD place and space, both. All right. Well, let's see if we can fit it in, James. Let's see if we can fit it in. Let's talk about this land tax malarkey and what's going on out there in the world of the media. I mean, the media is beating it up a little bit. It certainly is something that is very annoying for us as property investors. But, you know, what we must do as property investors is understand. It's very dodgy wording. We must understand the facts of the matter, folks. The facts of the matter. What are the facts of the land tax thing? Now, what is the land tax calculation based on, ladies and gents? tell me in the chat right now, what's the calculation based on? All right. When you go to calculate your land tax amount that you're charged, is it based on the valuation of your property? Let's say, you've got a $600,000 house in Queensland, let's say, or anywhere else, to be honest. What's it based on? Well, it's based on the rateable land value. Okay, land value. So the rateable land value. So you get that in your rates notice, on your rates notice, land value only, Jeff. Yep. Okay, it's based on the rateable land value. And for all of us as property investors, we need to understand what our land value is to work out our land tax, obviously. Most people who are catastrophizing this land tax issue are people who are thinking the property value rather than the land tax value. What's a couple of ways we can minimize our land value but still maximize our personal wealth? Anyone know what they are? Really, at the end of the day, you can own in different names. So own in different names, folks. Own in SEP names. Okay, or entities if you want. Entities. So at this point in time, as far as I understand the legislation, if you own in super is separate. Yep, exactly. Your principal place of residence, your PPR is not included, folks. Your principal place of residence is not included. If you own a property in your super, that's a separate entity. So if there's a couple, let's say just if there's a couple, person one owns property in, let's say, a couple of other states. Person two owns property in Queensland. And then entity three, which might be your super, owns another one as well. So there's a way to do it. But if you already own them, maybe you can't retrofit it, right? Maybe going forward is still fine. And then the other one is, units and apartments, units and townhouses still can attract very good quality when it comes to real estate and location and value and wealth and rental income, certainly tax deductions as well. But the land value is less. Land value is less. Is less. So you could buy a unit or a townhouse and your land value would be pretty minimal. All right. So let's quickly jump over to the, I got it here. Let's have a look. It's a bit squishy up the top there. Hopefully you can see it. But, if you have a look at right now, I just chucked a couple of things in here. I go, right, okay, here's an investment property. I've got, $500,000 worth of land value in Sydney. I've got $500,000 worth of land value in Queensland. And I've got $500,000 worth of, let's just put 500 grand in there. Not 5 million. Don't do that. $500,000 worth of land value in Victoria, right? So if you have a look at that, normally these wouldn't attract any land tax. That would in Victoria. The difference right here is $4,200, right? A lot of people are getting carried away thinking it's like 20 grand and 30 grand and all this sort of stuff. And it's not. Get the calculator. Do some calculations based on your rateable land value, folks, and, just work out the number. So many people are dramatizing this thing. Yes, it's a grotty cash grab by a bunch of twits, which we call politicians, and I don't care which ones, where they sit. They all bloody change their minds, and they mess with what we're trying to do, changing the rules as we go along, which is a real absolute pain in the neck, obviously. However, folks, the facts of the matter is that it's not end of the world stuff. Yes, it's a pain. Yes, it affects your cash flow. whack it in the whack a rent rise on there and cover your costs for sure. And it's tax deductible. Doesn't mean that it's great, but it still can be a deduction. Anyway, there you go. For me, right now, I think it's blown way out of proportion, and it's mostly because the government is double taxing. It's actually, technically against the law. You can't double tax. You can't be double taxed. So there's a few politicians having a crack at that as well. So anyway, hopefully that might be of use. If you want the totally they will. They will, Jeff. It's the dumbest. It's actually stupid. It's stupid. If they go through with it, I think there'll be a backlash on the Queensland government, unfortunately, for the people who live there, not for them. So let's talk about the vacancy rates right now. Here's another thing that's going on that for you and I as property investors, we need to keep an eye on. We've got a crisis. I called this out a while ago. I said, listen, we are in the middle of a rental crisis and also a rental boom, and rental booms go slower. They go slower. They kind of surprise everyone, to be honest. They go slower than capital growth because, the rents can only change every 12 months, maybe every 6 months if you're in a state that allows that. But most states say you can only, the length of your lease is 12 months, so you can't change the rent in the middle of it unless there's some extenuating circumstances, right? So let's have a look at this. We've got a housing crisis. Like up in Brisbane, it's crazy. People are living in tents. Nationwide, we've got 16-year low national vacancy rates. The pressure, the demand for rentals is high. And for all of us, when we're having a look at, okay, what's going on, the vacancy rates are super, super low. If we scroll in here, if we drill in, check it out, team. This is unheard of. This is unprecedented across the nation when it comes to the vacancy rates. And these cities, where we have a look here, look, check out, other than Sydney and Melbourne, which is they have a lot of inner city student high density accommodation, which we aren't investing in anyway as property investors. Well, you shouldn't be. That sort of investment vehicle or that investment product is terrible. So really, if you took the CBD out of these vacancy rates, it'd be, under 1% as well. We're in a crisis. We're in a rental crisis here. And the changes, this is interesting though, places like Sydney, Melbourne, Brisbane, the asking rents and the increases are starting to take effect now. Now, Melbourne has been treated a little bit, harshly when it came to the last couple of years, because check out the vacancy rate in Melbourne and Sydney, predominantly because of that high density living stuff in the cities when it came to students and that sort of thing. Those two cities ended up with higher vacancy rates because of tourists and students not being available in the cities. But you can see very quickly, ladies and gents, that has come down pretty significantly when it comes to, this stuff. So we're looking pretty interesting. Well, it's looking pretty interesting for us as property investors. What's on the radar for us in the future? What do you guys think? Tell me. Is the marketplace going to fall apart? Put it in the chat. What do you guys think about the property market? There's a little bit of uncertainty, a bit of a beat up when it comes to the stamp duty thing in Queensland. Yep, that's a pain in the neck. Interest rates have gone up. Yes, that's an expense that we were hoping, we can manage as property investors. Don't buy 000 postcodes. 100%, Luke. That is an absolute no-no. So what are we looking at in the future, because it is pretty interesting when you have a look at, the amount of people renting. Oh, let's have a look at this here. The amount of renters slowly but steadily has increased as well across all demographic points. That's just the way it is right now. And, even when we've had very, very low interest rates, the number of renters have increased. So it's got little to do with, that statistic. And you have a look at the number of houses and units, at, record asking rents based on a median price, is bouncing back up again. What was this here? Check out this, from here to here, this was a decade, really, close to a decade of interest rates going down. Down interest rates, okay? So now we've got a bit of interest rate going up. Rents, by and large, went down based on inflation over that decade, which was quite a strange thing. But what's going on now for the marketplace? What's going on for us as property investors? Well, other than the spike, which was stimulated by the government giving away free money, we've got rent to own or build to rent, big companies coming in and buying and building, hundreds and hundreds of apartments at one time and keeping them. They're not selling them. It's not going to the open rental market or the open investor market. Again, reducing quality stock. And, a lot less properties are being constructed. And anyway, this spike is not going to the rental market, folks. It's going to the owner-occupier market. That had nothing to do with increasing supply for the rental market. Sometimes the government don't think too far past their nose. Well, a lot of the time. Anyway, and what do we got now? We've got the government looking at the migration intake over the next 3 to 5 years, again, being record migration. If you think about, where are we now at crisis levels when it comes to the rental? And if you go 3 times 200,000, 600,000 to 1 million people over the next 3 to 5 years, where are they going to live, folks? Where are they going to live? It's crazy. It's crazy. Yeah. I think, I believe so too, Paul. I believe that the rents will go up to match the cost of the money, match the cost of the interest, and so they should. So it absolutely 100% should. The median price in some areas that really overshot its mark by a bit. Places, especially Melbourne and Sydney. Melbourne and Sydney have been adjusting, and I think we'll see a little bit more adjustment in those median prices, especially the high house pricing. And then it'll settle down, the interest rates and the rents will level out, and then we'll see growth in house prices and apartment prices again, or dwelling prices across the market. So certainly for us as property investors, that's what I see on the radar. That's what I see out there in the market for us when we're looking at owning property. So don't get carried away. Don't get caught up in this media mayhem, bit of this fear and ignorance when it comes to the land tax malarkey. At the end of the day, it's not a big deal from an actual cost point of view if it ends up eventuating. Work out the dollars and cents. Work out the cost. You've got a year. Put your rents up, cover the cost. Okay? Put your rents up everywhere across all of your properties and cover the costs as you go. Find out the facts, folks, because facts and statistics are pretty good when it comes to making sure we make good, smart, quality decisions when it comes to our property investment portfolio. There you go. Anyway, back at it. A little bit rusty this morning. I haven't got my mojo back yet, but we shall see. Tomorrow I'll update the the headlines in my posts and get myself organised. Hope you're all awesome and well. Yeah, Jeff. Well, there's a bit of uncertainty in the share market. Crypto's, quite volatile, has been. Real estate becomes a place where everyone likes to store wealth because it is kind of, especially in Australia, its volatility is far less than the other marketplaces, the other asset classes when it comes to ownership and long-term value. Remember, we've got a couple of sayings around here. Buy well, never sell. It counts. It counts. Like, it just makes no sense for you to be entertaining, oh, should I sell my Queensland property? Because there might be a $4,000 tax bill. That's lunacy, folks. Lunacy. Like, 10 years, that's 40 grand. Your property goes up, 1%, it'll cover that in value. Like, it's, anyway, I don't think that's a good 50-50 shot that it won't get through if we get some of the politicians who need to win some votes. And they're not doing it because they like us, by the way. They're doing it because they want to win some votes. The other way. Anyway, there you go. I'm just rabbiting on now. All right, that's it. Done and dusted. You guys be awesome. Be well. Join me tomorrow. We're going to do another one, Wealth Coffee Chat. We will be back at it, folks. So make sure you're there about 10 past 8 every morning, Monday to Friday, unless I take a week off. Yeah, there you go. We'll hang out and do this each day. As always, put something in the chat if you want me to talk about something specifically. Always great to hang out with you guys. Till tomorrow, you guys take care. Bye for now.